Hello, welcome back. This is Si Wing Yi. As a real estate investor, I'm asking you this very critical question. Are you going to wait until in a future time to buy investment property, or are you going to pull the trigger now? Your decisions or lack of may make or break your financial future. Here's your buy box. Your buy box is you have a criteria. You like to purchase a portfolio of cash flow turnkey rental properties, single family homes, residential investing, or maybe sprinkle in a duplex or fourplex into your portfolio in the next few years. This is your buy box. This is your criteria. Okay. That's your shopping cart. Let's go real estate shopping. Your goal is to buy and hold this property for the next 10 years or more, 10, 20, 30 years, or even for the rest of your life. Okay. This is the assumptions in which we're making. I'm making a lot of assumptions. Just bear with me. Just have an open mind. By the way, at the end of this video, if you see a lot of value from this presentation, please smash the like button and subscribe to my YouTube channel, and also subscribe to my email newsletter on my website below, so you can become a free member of our real estate investing community with the Year Real Estate Network. So let's get back to this situation. In the past few months, there are various websites that have created a 23 real estate projection forecast. And I've done a lot of videos in the past couple of months. So you can watch the other videos that I already produced. But I'm going to summarize all these credible sources that has already done their 2023 real estate forecast. I'll go over a little bit by little. Realtor.com project that the home prices in 2023 will increase approximately 5.4%. Homes LLC 4%, CoreLogic 2.8, National Association Realtor 1.2, Freddie Mac 0.2, Bankers Association 1.2, Redfin, which I use a lot, Zelman also has been doing a lot of real estate housing projection, Fannie Mae, Goldman Sachs, of course, and toward the right hand bottom, Goldman Sachs, John Burns Consulting, and a few others down the lower right hand corner. They were very pessimistic with real estate and Morgan Stanley. And anyway, so there is a lot of who knows what they're talking about. We just don't know. But so I'm sure you guys agree that in next year, at least in 2023, there may be some kind of like a back, just real estate overall nationwide is just slowly go through the correction process, right? Some markets may have additional home decreases, home reductions, and some markets are bound to have an uptick in terms of appreciation potential. So it's really local in case you do not know. Let's assume for 2023, even 2024, even 2025, the next 2 or 3 years, yeah, the housing market is hovering around at the bottom, like without any significant increase of appreciation or without any significant decreases of deceleration, if you will. Let's make that assumption. So, as a risk investor, what should you do? Do nothing and wait. Wait for what? That is my critical question. As a risk investor, you're waiting in the sideline. You're waiting for what? You're waiting for real estate crash to happen? That will probably not happen. Yeah, I don't foresee it because all the data, and if you watch my videos, if you watch all the sources, and clearly I do not see a real estate crash coming. A correction, we just finishing up the last 9 months of correction in a number of those markets. I don't know if you waiting for a pre-pandemic housing price reduction before you jump in. Guess what? You may be waiting for a very long time. You do nothing, or you do something. If you buy investment properties right now using the buy box I just created. So what are the risks involved? What are the benefits involved as opposed to someone who's waiting on the sideline if you try to perhaps you try to time the market? Well, I've been doing this for 30 years. Risk investing, timing market, timing the market almost never works. It's just you cannot predict the future. I would not recommend that. Getting back to my slideshow, let's go ahead, continue. Well, again, I'm just going to show one slide to indicate that we have a very extreme shortage of homes to buy. As you can see by this chart by Altos Research, we are right now not even 500,000 homes available in our single family home inventory, and we need about 1.5 to 2 million annual basis. We are at like 25% inventory level of home available for sales. I'm not going to get into the details. My other videos will cover that. The supply of inventory nationwide is a little bit less than 4%, where about 5 and 6% monthly inventory is a buyer's market. We are still at a seller's market and still shortage of inventory nationwide and what have you. When you have a pent-up demand with the mortgage rate, hopefully, or slowly coming down, we hope, below 6%. That's the prediction for this year, that we will see more pent-up demand. Once the pent-up demand start to elevate, then we could see a very shortage of supply of homes available out there, especially when a lot of homeowners are locked at the tremendous historical low interest rate. So home sellers are not selling and builders are not building enough new homes to accommodate the pent up demand for the next few years. Agree so far? Right. This chart is really a clear indication, really is down to economics 101. When demand is greater to supply, we will see a appreciation type of market down the road. Let's continue. If you risk investing is very unique. If you do not buy, if you continue to sit on the sideline, you will forego the following 4 or 5 benefits you have by owning an income rental property. Because income property is history's most powerful and proven 5-dimensional real estate asset class, because you're getting paid many different ways. You get paid positive cash flow, passive income, tax benefits, long-term appreciation, and you can leverage your purchases with a 30-year fixed rate mortgage. And I'm not going to go over too much of the details because I want to make this video. You can, once you own a property, you could increase your rent over time, relative to inflation, therefore increasing your cash flow on an annual basis. Your tenant's going to pay down your mortgage, self-liquidating debt destruction, I call it. And of course, hopefully, we don't know the future, projected historical annual appreciation is 4 to 6%. Look, even if you take the plunge right now of buying those kind of property, if your property are reducing value, it doesn't matter because you are a long-term real estate investor. As long as you're collecting the checks, collecting the rents, as long as you're achieving positive cash flow, who cares if your house may have gone down in value, at least temporarily. Once again, you need to become a long-term investor. Over time, on a historical basis, over time, real estate always increases in value. That has been proven over and over again. It really does matter. Really does matter. You know what I'm saying? If you do not buy under this current economic challenges, you could have forego potential for gaining the tax benefit. You can forego the ability to receive consistent cash flow over and over again on increasing your rent over time. You could foregoing your tenants paying down your mortgage for you systematically over time. Okay. So what you may not get the appreciation at least the next 12 months or whatever. That's the worst case scenario. Stay in the sideline, you are depriving yourself or those at least 4 or 5 benefits of owning a rental property, as I stated. Does that make sense? Okay. So let me share my screen again. Let's continue on. And of course, I'm not go over the other things. I mean, what other options do you have if you do not invest or your money for investment to real estate is if you're keeping it in a cash position, you can either buy inflation is unofficially is double digit. So you're gonna lose your purchasing power of your cash if you're sitting on the sideline. What other options do you have? You can speculate in stocks and bonds and crypto and bitcoins, right? Instead, those are highly speculative investment, whereas real estate is a very proven historical asset in hard asset. Okay. And again, I'm not going over the additional benefit associated with long-term investing in real estate. You can, when you watch this video, you can pause your video button and just digest some of this additional benefits afforded you if you are a long-term investor. And of course, the power of the fixed rate mortgage is amazing. Your payment will never going to go down or go up because it's fixed for next 30 years. You just, the tenant going to pay down your mortgage, definitely. That's okay. You have the ability to buy this type. Your buy box, as I said, is anywhere from $60,000 property to around 350. This this is the criteria. This is the what you call it. This is the metrics we should use because the rent will cover as long as your tenant paying whatever rent will cover all your monthly debt service, your mortgage, taxes, insurance, property management fee, et cetera, et cetera, et cetera. As long as you buy in the right location, you buy with the right system, and you find the low cost home prices to purchase and match that up with the appropriate rental rates, and you'll be fine. So at the end of the day, if you receive a positive cash flow, you're going to win because your tenant, whatever, based on your research, you find the right market, the right turnkey provider, those kind of things. I'll give you a hint. You buy in areas of Midwest or South and Southeast where you can find this entry level, inexpensive, affordable markets to achieve positive cash flow when you leverage through a mortgage. These are typical homes. Some are new homes, some are older homes, right? So in the Midwest, you find very older homes, but if you live in the South and Southeast, you can potentially buy to new construction, actually very inexpensive entry-level new construction homes, single-family homes, and get the renter in there to pay your debt service, you make you rich, pay down your debt, all these things. The Midwest is much, much cheaper, older homes, but turnkey rehab homes already will command a very high rent relative to purchase price. So these are type of buy box, if you will, as I introduce this video. This is your key. As long as you receive a positive cash flow when it's all said and done based on your down payment and based on your gross rent and your debt service, mortgage, and all the related monthly debt service, and you should be fine. Mix in with some cheap fourplex, very high cash flow. I'm not going to go over the numbers. This is diversified geographically, diversified within asset types, single family home investing, duplex, triplex, fourplex. 1 to 4 units is max I can go to. So Warren Buffett, the greatest wealth builder in history, be fearful when others are greedy and be greedy when others are fearful. Here's my recap. If you do nothing, if you're trying to time the market may pass you by, and or the money you potentially use to buy income property or sitting in a sideline and eat away by inflation, losing your purchasing power. Or if you try to buy other investments or much more riskier, stocks, crypto, Bitcoin, whatever, is purely, or if you try to flip home short term, that's not going to go well. Very risky. Long term, buying the right market, affordable markets with property management in place, with a turnkey system, we have a team, a credible team to help you do all these kind of things. So, and the other takeaway from this video is such that, again, if you stay in the sideline, the money is not working hard for you. You don't know when the market will pick up and you can miss the boat. If you take a chance, knowing you pick the right market, buy cash flow property with a good rental market, which is a lot of people are renting these days, in case you have not heard. So getting a renter to make you rich, to pay your debt off, to pay your monthly debt service, and still have a little bit of cash flow, at least in the first year, is a very good calculator just to take. I hope, I'm giving you some hard decisions to make. Do your research, do your due diligence, surround yourself with a good team, buy in the right market, buy where the numbers make sense. And even if your house go down in value, at least temporarily, invest for the long term because you're getting multiple streams of revenue, as I stated to you. As I conclude this, if you receive a lot of value from this video, please smash the like button and subscribe to my YouTube channel, and also actually provide your email at the below on my website so you can become a free member of our real estate investing community so you can receive amazing information about real estate information and education seminars. What have you. Thank you so much. This is Steven Yi. Have a nice day. I'll see you on the next video. Bye-bye.